Afternoon, everybody, and thank you for coming to the How to Make a Successful Application to Flexible Finance webinar. My name is Christian Stannard. I'm a Senior Relationship Manager with the Social Investment Business, and obviously I'm kind of one of the co-hosts for the webinar today. We also have Deborah Healy. Deborah, would you like to introduce yourself?
Yeah, thanks for that, Christian. So I work at Credit Equity. I support organisations like yourself through the investment process, and I work alongside Christian and Grace. My background is I spent 30 years in corporate life as a senior leader, first for an investment company and then a global media organisation working on cross-functional departments. So I've been exposed to operating businesses for most of my career. Last 6 years I've been working in social impact. So I'm delighted to be here today with Christian and Grace.
Fantastic, thank you, Deborah. And we also have Grace James. Grace is going to be kind of sitting in the background and looking after the question and answers. But obviously, Grace, if she needs to kind of input into the webinar session, she can as well. So just wanted to start today just by going through a very brief session outline. It's not very formal. We are here to talk about the Flexible Finance Fund. So we're going to give you a bit of background of obviously kind of the reason why we designed and introduced the Flexible Finance Fund, the success that it's having in terms of getting obviously more money into Black and racially minoritized led organisations. We'll give a bit of an overview of the fund, so what it is, what the eligibility looks like, what you can use it for. We'll talk in a bit of detail about the application process, including the documentation that obviously that you as organisations need to provide. Talk a little bit about the assessment process and kind of what that looks like. And I think most pertinently for people on the call maybe is what we mean by investment readiness, and as social investors, what we're looking for and what we look for to enable us to be able to invest in your organisations. And then very briefly at the end, I've got some case studies. It's just a couple of anonymised case studies just to give you some idea of the sort of kind of organisations that we're able to support, and in terms of the investment packages that we can put together. So for the background of the Flexible Finance Fund, I'm going to shut up for a few minutes and I'm going to pass over to Deborah, and Deborah's going to talk through this.
Amazing. Thanks for that, Christian. So what is Flexible Finance Fund? It's a mixed blend of loan and grant. So typically it's 100% loan and 95% grant. So an example of that might be £100,000 in repayable loan and 95,000 in grant. So SIB did some desk research on the progress of the fund over time since it had been launched. And what it did was it took a sample size of 5,000 plus social purpose organisations and looked at the data and analysed it. And what they found is that organisations that were led by Black and minoritised leaders were more likely to be smaller in size, have received less finance and support historically, have weaker governance and financial structures in situ. That's not to say that we can't improve those, and have business models that might not yet be mature, are insecure, and potentially less able to be established. And so as a consequence, there was lots of factors that was working against leaders from these communities, and which meant that they were less likely to get investment. And therefore that would turn into a continuous cycle that could go on for generations. Next slide, please, Christian. So what did we need to do? So briefly, I just want to describe what was on offer. So the first fund that was launched was during COVID-19, and it offered loans of between 100,000 to 1.5 million. And it was available during the COVID-19 pandemic. During that time, 213 applications were received. So let's look at the detail and the data, because it's really important that we dig deep and understand what took place. So of the 213 applicants, only 56 of those were from the Black and racially minoritized community. So that's just 27%. And of those that were eligible, so there was only 105 that were eligible, only 13 of them came from those communities. And out of those funding applications that were approved, only 3 from the Black and racially minoritized communities were successful. So as you can see here, we've got a diminishing number of success for those leaders. Next slide, please, Christian. So as a consequence of the data findings, SIB worked with Create Equity and the Ubele initiative to design a multiple amendment and intervention specifically focused on Black and brown racially led organisations as follows. So it's now known as a Community Builders Fund because the COVID-19 pandemic is behind us. And the new loan provides up to 100,000 to 1.5 million in loan. We've looked at the turnover of the organisations because, as mentioned previously, organisations typically had a lower turnover. So instead of the level being turnover being 400,000 annually, it was reduced to 200,000, which meant that the more and more Black and minoritised organisations could be eligible. So that increased the number of applicants that we could receive. We also looked at the loan size and we reduced that. So the start point for the loan size is now at 50,000 instead of the 100,000. And we are able to get up to 100% in terms of grant versus the loan. Whilst previously the target was 90%, it's close, I would say, Christian, to about 95%, would you say, grant versus loan?
Yeah, so just to be clear, we can provide an unrestricted grant of up to 100% of the loan amount. I think the overall target for the fund is about 95. Out of all the cases that we've done, I don't think there's any organisation that's received an unrestricted grant of a less than 90% of the loan amount. So it's not like, well, we can give you a grant of up to 100% of the loan amount, but you're only going to get actually 50. It's still incredibly generous, even at the lower level, which is, like I said, I think the lowest ratio we've done is 90% of grant loan.
Yeah, but typically I mean, the team will always push for 100%. Typically, we're seeing 95 to 100, yeah. And as Christian said, spread across the actual fund, it's certainly above 90%. Yeah. So it's one of the most generous offers, I think, that is out there if you look at what's available in the market. So it's a really good blended finance scheme. There is also a small amount of restricted grant that's available over and above the grant that's given as part of the package. And that can be there or be given to organisations to help them address any identified weaknesses that you may have found when you've been working with your relationship manager or with Create Equity or Ubele. And that can be used to prop up and support things like business planning. You might need some financial planning support, tax support. So whatever you need, we can provide some additional restricted grant, and it's a small amount. So Christian, it's typically between 5,000 and 7,000 in addition to that. Is that, would you say, is about the right amount that we would?
Yeah, I think that's the average for the fund. And again, it tends to be for it is kind of post approval, so it's once you've got your loan and your unrestricted grant. So it's not where we're saying you have to do this bit of work to be able to get the investment. We're giving you the investment, but this is in addition to it. And typically, what organisations will do, they'll use it to pay for like an external consultant to come in and do a specific piece of work. And yeah, the average grant tends to be between £5,000 and £7,000.
Yeah. So it's awarded at investment committee. It's not necessarily something that you've asked for. It's something that we might have identified together, and then it's given over and above the grant that you might have applied for. Okay, next slide, please, Christian. So the good news is, so some of these interventions have greatly improved the results and the performance for leaders of Black and racialized minoritized organisations. And I think the stats really speak for themselves. So we're now seeing 51% of applicants coming from these communities. Previously, it was 27%. We're now seeing a real uptick in successful applications. It was previously 4%. It's now up to 24%. So that's really good news. And 3.8 million of the funding agreed with a further 2 million of funding that was launched just in December 2024. So it's good news, folks. So working in partnership with Ubele and Create Equity has been really successful. The team are really open to looking at what sort of interventions could be made to increase and improve the success of leaders from these organisations. That's it for me, Christian, but feel free to bring me into the rest. Should you want to?
Fantastic. So it's back over at me, but Deborah, obviously, as I go through, if you want to add anything, please just kindly jump in. So in terms of the overview of the Flexible Finance Fund, it's important to talk about eligibility because not every organisation is going to be eligible. We do have some specific criteria for it. And whilst we've relaxed the criteria compared obviously to just like a, kind of white-led organisation, there is still has to be some criteria there. So I just want to run through them. So when we talk about black and racially minoritized led, what we're talking about is at least 51% or above of your board and your SMT have to be obviously from that background. You need to be legally constituted as a charity or a social enterprise. We don't get too hung up in terms of legal structures. So if you're a registered charity, you're a company limited by guarantee, if you're a community interest company limited by shares, community interest company limited by guarantee, that's fine. If you're sitting there as a community, as a company limited by shares, we can lend to those, but we just ask you to do three things. In your governing documents, you have to have a social mission. You have to have a rule on the distribution of profits, which states that you don't distribute more than 50% of post-tax profits in any year, and you have to have an asset lock. We see very few of those, if I'm being perfectly honest, but so the point we're trying to make is we don't get on legal structure as long as you're a social enterprise. You need to have been operating for at least 2 years. I know that kind of discounts a lot of organisations that are in the startup phase or just starting to build a business. That's not the bit of the market that this fund was designed to help. There's other sources of support out there, so you need to have been going for at least 2 years. In terms of social impact, we can fund anything. It doesn't matter. There's no themes around it, so you don't need to be working in health, don't need to be working in youth. You just need to be delivering social benefit for people or the environment that they live in. The minimum turnover requirement is at least £200,000 in its last financial year. I mean, what I would say is we have a little bit of flex around that. So maybe if you did 200,000 the year before and you went down to about 180, we can have a conversation. But if it's like your turnover in the last financial year was £100,000, we are not going to be in a position to help. No previous repayable finance greater than £25,000. We do exclude bounce back loans. So if you have already had social investment and you went, I don't know, like another social investor and you've raised £100,000, that's great. That's a really, really good news story. But that's not what the fund was. The fund is specifically developed and designed to help organisations that have struggled to access finance. In terms of the grants, if there's any organisations from Scotland and Wales, we can lend you the money. Unfortunately, we can't give you any of the grant funds because of obviously the kind of the devolution, and Scotland and Wales have their own kind of grant programs. So the grants are for organisations based in England only. And I said we can fund any theme, any area of work that you're kind of delivering. It can also be used for any purpose. So whether that's cash flow, whether that's capital development, whether that's investment in business development function, if you need the money, we can lend it. I mean, there's the normal exclusions around alcohol and tobacco and gambling and kind of all the legal exclusions. But yeah, it could be used for any purpose. That includes the refinance of existing debt. So if you have borrowed money before, but it's less than the 25,000 and you want to refinance that, we can kind of do that as well. So in terms of what I could receive, Deborah's obviously touched a little bit on this at the start, but again, I think it's worthwhile just running through it just to make it really clear what the investment package is going to look like. So the minimum loan investment is 50,000. The maximum is 1.5 million. That is exclusive of the grant. So if you were coming to us as an organisation and saying we need £100,000 of funding, the way we would profile that is a £50,000 loan because that's the minimum loan, sitting alongside a £50,000 or up to £50,000 of unrestricted grant funding. The loan itself, and we need to remember this isn't just a grant fund, it's a grant fund and a package of support that sits alongside a loan product. So the loan has to be repaid. The repayment term is between 1 and 6 years. We will give you an initial 12-month capital repayment break if you want one, which means for the first 12 months, you will only be paying the interest. The interest rate is 7.9%. That is fixed for the entire term of the loan. There is no reviews. It is not linked to base rate. So you know that gives you surety of knowing what your repayments are going to be each and every month for the term of the loan. There is an arrangement fee for loans of less than £500,000. It's 3%. So if you're borrowing 50 grand, it's 3% of 50 grand. For loans of £500,000 or more, it comes down a little bit, it's 2.5%. The arrangement fee can be added to the loan, so you don't have to have that cash available. We can add that to the loan for you. If circumstances change, so if you take a loan for over 4 years and you have a cash windfall, or you're doing better than you think you have done, if you want to make an early repayment of the loan, you can do that, and there's absolutely no early repayment fees. You do not get penalised for paying the loan early. And for loans of up to £250,000, we will not take any security. As a social investor, we never look for things like personal guarantees. We do reserve the right, if it's particularly high risk, possibly for less than £250,000, we would take like a standard fix and floating charge. I can't remember any circumstances when we've done that in the last couple of years. But any loans of £250,000 or above will have the standard fix and floating charge. So in terms of the application process, just very generally, so we've got our two brilliant support providers in terms of Create Equity and the Ubele initiative. They are there. They can provide pre-application support. So if you need help and some advice around what looks sensible, kind of chances of success, if you need help, obviously pulling some documentation together, if you need help actually doing the application itself, those two partners are there obviously to do that. Further information, we've got a lot of stuff on our website about the fund. Obviously, there's a link to the application page. There's FAQs there. You'll find some case studies. You'll see your previous webinar that we've done. In terms of the actual application itself, gone are the days of having to put together a 20-page application form. It's more like an expression of interest. And if you've got the information available, we ask about your organisation, we ask about who the main contact's going to be, we ask about where you're based, we ask about who you work with, we ask about what the investment's going to fund. The way I describe it, and I think this is the best way to describe it, is it's the start of a conversation. So we're going to cover documentation in a second, but when you do your actual application, you need to think of it as the start of a conversation, not just like I'm putting an application in and I'm going to get a yes or no. It just starts a conversation going. And in terms of the delivery partners, it's entirely your choice. If you've got a relationship with Create Equity, they do some fantastic incubator programs and business support programs, as do the Ubele initiative. They both have their areas of expertise, and you can find that on their website. It is entirely up to you which of the partners that you choose. So if you have a preference, that is entirely up to you.
Christian, it might be worth just describing the blended package again. We've got a couple of queries on, how much loan, how much grant.
Fine. Sorry, I'm focusing on the slides and not the questions, so that's incredibly useful. Thank you, Deborah. So in terms of an overall package, we provide a grant of up to 100% of the loan amount. So up to 100%, the lowest I think we've done so far is 90,000. So as an example, if you were coming to us and saying that you needed £100,000 of investment, and that's what the forecast showed you needed, we would be providing a loan of 50,000 and an unrestricted grant of 50,000. So it's not that. So the grant is up to 100% of the loan amount. If you were coming to us and saying, well, our total need is 200,000, again, it would be £100,000 of loan and up to £100,000 of unrestricted grant. If it's 300, again, it would be £150,000 loan and £150,000 of unrestricted grant. So it's not as a percentage of the overall investment. It's the grant is it's as a percentage of the loan.
Amazing. Thank you for that, Christian. Hopefully that clears that point up.
Good. In terms of the documentation, we do have to ask for some information. This is the stuff that you must provide. So we need your last 2 years of annual accounts. Some people do like abridged accounts where they show a balance sheet only. That's no good for us. We need to see the profit and loss and the balance sheet. So the last 2 years of annual accounts, if they're audited, independently examined, just prepared by the accountant, you have to produce something. So if you're a registered charity, you need to do obviously for the Charity Commission. If you're a CIC or company limited by guarantee, you have to do something for Companies House. So you will have them. So that's fine. That's information that you should have in anyway. In terms of your management accounts, we try not to be too prescriptive with what you produce because every organization's got different financial management, capability. If your financial year ends in, say, the 31st of March 2025, you're unlikely to have annual accounts for that period yet. So you can send us your management accounts for that full year. But then we're also likely going to want to see something from, like, say, the 1st of April through to, say, I don't know, maybe it's the end of June. So it's just getting up-to-date financial information, but don't produce anything specifically for us. It should be what you're producing and using anyway. And then obviously the cash flow forecast. So we want to talk about the cash flow forecast in a little bit more detail, because that's really is like one of the key documents. And there's some very kind of specific guidance around it. You also have the option to put in optional information. You can send us whatever you like. I mean, if you have a business plan, that's fine. Feel free to send it. If you don't have a business plan, we will not ask for one. The way I kind of describe it now is when we go in the assessment process, we'll talk through your business plan. It's a verbal business plan we're looking for around all the stuff that you would put into a business plan. So if you don't have a business plan, don't feel like you need to do one. We're not going to see it. If you do a social impact report, that's always incredibly useful to see. If you just have a document where you talk about your social impact, again, that's fine. If it's around capital development plans, so if you're looking to do something around the building and you've got some costings or you've got some drawings, again, you can send that. But this is all optional. You don't have to put this stuff in. It's very minimum. All we need is your last 2 years annual accounts, which you should have in anyway, the management accounts, which an organization should be producing, and the cash flow forecast. In terms of the cash flow forecast, Deborah, it'd be really good to get your kind of input here as well. I'll go through obviously what I think we kind of need. As a very minimum, we want to see 12 months, as a very minimum. During the assessment process, we may ask you to extend that out. And typically, we only do that if your 12-month cash flow forecast shows a cash deficit. And that goes back into affordability and being able to show us evidence that you're going to be able to repay the loan. So minimum of 12 months. If you have longer, that is absolutely fine. We don't need a really complicated financial model. If your organization has produced a really complicated financial model, that is absolutely fine. You don't have to dumb it down for us, but we don't need you to kind of do something really detailed, with about 10 different tabs and all feeding into everything. If you've got that, fine, you can send us that, but if you don't need it. In terms of income and expenditure, you need to be very clear in terms of what assumptions have been used. Now, you can do that one of two ways. You can either tell us in a document when you provide your documentation and the application, or we will talk through it in detail once we start the assessment. But you have to be really clear in terms of income, break it down, what's the source, make sure it's phased correctly. So if you've got, I don't know, £100,000 grant, and you're showing that you're going to get that £100,000 in 12 equal installments, grants typically don't work that way. They tend to be paid quarterly in arrears. So just try and make sure that it's kind of shown in the way it's actually expected for the cash to land into your bank account. So in terms of the income, be very clear, is this stuff secured? Is this like is this a target? If it's a target, what assumptions have we been used? What assumptions have we used to put that target in? If you're typically generating £100,000 or £50,000 a year from grants, and then we get your cash flow forecast and it shows that you've forecasted £1 million, is that really realistic? So be prepared to answer some fairly detailed and kind of challenging questions around that. And it's the same for the costs as well. So last year, your costs were £100,000. if in your cash flow forecast you're showing that your costs are going to drop to £50,000, really is that realistic? And especially if your income is going up, if your income's going up, you'll be doing more. We'd expect costs to go up. So it's just really about sitting down and kind of spending some time and actually really putting together a fairly decent, robust forecast. It doesn't need to be fancy, but it just needs to show us what the income is, what the expenditure is, and like an opening cash balance, so we can just really understand what that forecast position is going to look like over the next 12 months. Deborah, do you want to add anything in about the cash flow forecast? Because I know it's like your area of expertise.
Yeah, this often can be the most, as Christian mentioned, can be the most challenging part of the application. Actually, it's a really good exercise to do to, for, as an organisation, because I think it's really important to understand the type of income that you get. Broken that down into potentially grants. It could be local authority, so it could be government money, or it could be earned income from some of the services that you're delivering or events, for instance. And the behaviours of those types of revenue and income could be very different. Grants, for instance, they could be multi-year. So, you could be in year 3 of a 5-year grant. When it comes to things like local authority, it could be that you have to bid annually, or that you're contracted for 3 years because you're a preferred supplier. So it's understanding and getting underneath your financial forecast is really important. And also that you have a pipeline, and a pipeline, it could be you're prospecting. So it could be that you put in £1 million worth of bids each year, because you've got a team that does that, or you put in £300,000 worth of bids each year, but you'll have a conversion rate. You might know that you convert roughly 10% of the bids that you put in. So it's really understanding your numbers, and we go through that in quite some detail. And the reason why we do that is because we want to make sure that whatever is provided is affordable. We have a real responsibility to make sure that it's affordable for your organisation. And so that the cash flow is a really important part of that, making sure that this is affordable for you.
Yeah, fantastic. Thank you, Deborah. So in terms of the assessment process, so we've spoken about the application and the documentation that you need to provide. Again, I think it's worthwhile just spending a little bit of time on the assessment process. So the way it works, again, you put your assessment in, application in, you put your documentation in, you've selected your delivery partner. The SIB relationship manager will work with whichever delivery partner that you've kind of chosen, and we will work quite closely together. In fact, very closely together. Obviously, Deborah and I have done quite a few of these, and the way we do it now, obviously, we both have an initial review of the application and the documentation. We'll do some digging around Companies House. We'll look at your website, just to form a view on, once we've checked eligibility and stuff, how realistic we think this is. What that allows us to do, we start kind of identifying the gaps that we need to understand more of. So it allows us to put together like an agenda for obviously the next stage, which is basically a call with the applicant. So we would always get in touch with you. We would send you an agenda for the meeting. The initial call tends to be like about an hour and a half. And what we're doing there, we're looking to test, have we got all the information we need? Do we understand what the ask is? Does the ask make sense? We'll do some stuff around the financials. So that's the SIBRM and Deborah or somebody from the Ubele initiative will work together to do an initial assessment. We will have a call, and then we will kind of take that assessment forward. The delivery partner will be involved in any meetings with applicants, any follow-up requests. And what they can do, they're not just there to support SIB, they're also there to kind of support you. So if we have a specific information request that you might not be able to put together, the delivery partner can actually help with that. They do have limited capacity. So I think if you ask them, can you put together a detailed 5-year financial model for us? That might not be an option. But if it's a little bit of work around the cash flow forecast on, done a little bit of kind of work on that and better profiling, then that's available. The delivery partners are also involved in the internal and external decision-making process. So if we go through the assessment, we decide to make a recommendation, it goes obviously with the recommendation of obviously both SIB and the delivery partner. So we both have to want to do it. And the way the decision-making process works, we have an internal investment committee, which is kind of some of our senior lending teams. That's our direct investments and our head of credit. So as an example, Deborah and I will go to the external investment committee. We would have already prepared the assessment report. We will be there to answer questions, and make amendments as need be. If the internal investment committee are happy with it, it then gets presented to an external investment committee who have the final decision. Anything else you want to add on the way we work together, Deborah?
Yeah, I think that's perfect. So a couple of things that are really worth pointing out. So before our first meeting, we tend to send you the questions in advance, which means it allows you to prepare for the meeting. So there are no surprises. We're not trying to hijack you. We're just preparing you. And normally it covers things like governance and your team, because we want to learn all about what you do so we can understand and get under the skin of the business. And then we cover, maybe we might look at some of your financials. We both know what the internal committee are looking for. So we will, if necessary, and Christian mentioned it earlier, we can do some work offline to get it looking in a way that presents well and that the investment committee can understand very quickly. Because if they understand it very quickly, it builds confidence in the investment. So we could do that piece of work on that call, or we do it offline if necessary, if a little bit more support is needed. But as Christian said, it doesn't have to be a 5-year plan. It just needs to be able to communicate very clearly what is it that business does, how does it earn its income, what is its cost base, what's fixed, what can be moved, is it affordable? It's very kind of it's holistic, the way that we look at your finances, and I think that's it really, Christian, isn't it? We just want to make sure that we're checking that it's affordable.
Yeah, and I'll
Just,
cover that in a slide or two.
yeah,
But I mean, for me, it goes back to the point I make about the application, where it's the start of a discussion. The assessment process is a discussion. It's not just us coming in with a tick list of boxes that we have to tick off and then it's a yes or no answer. We look for reasons to do things rather than reasons not to do anything. So yeah, it's a discussion. But it's a discussion not just obviously from SIB, and very much driven by the delivery partners as well. So in terms of what we look for, again, we can't help everybody. It's at the end of the day, the unrestricted grant is incredibly generous, but there is still a loan there that has to be repaid. So is the proposal realistic? Loan to income. We don't get. So we're not a bank. We do score certain things, but we don't just run everything through credit template and get a yes or no answer. But it has to be realistic. So I don't want to put a figure in your mind, but if your turnover last year was £200,000 and you made, a £10,000 surplus, if you come to us and say, can I borrow £200,000 and repay that over the next 5 years, that's not going to work. Because the level of loan to income, unless you've got really robust, secure plans for growth, and you've got lots of secured income, it won't work. So it has to be realistic in terms of loan to turnover. I think anything more than about a third of loan to income is problematic. That doesn't mean we won't do it. So, if you're looking and thinking, well, actually, our turnover's, £100,000, and actually we really need to kind of borrow 50. I'm not saying we won't do that, but it has to be realistic. As a social investor, the reason we do social investment, we are incredibly interested in the impact piece. We really want to understand, your services, the reason why you do it, the areas that you do. We have targets around getting investment into the most deprived communities, obviously in England. We really want to understand your beneficiaries, and we really want to understand, do you do it well? So if you've got independent accreditation, so I don't know if you're delivering something that's Ofsted registered, or you're doing something that's Care Quality Commission registered, that's brilliant. If you don't do that, what internal processes have you got to make sure that your services are well valued, and kind of well delivered? People's incredibly important to us. We invest in people sometimes more than organisations. So Deborah's touched on it. We're really going to want to understand your governance, and that's not just, well, who's your chair and who's your treasurer. We want to understand these people's track records, their ability to be flexible, their capacity. Financial management, it's not a grant on its own. There's a loan. We have to have, some obviously confidence in the financial management and capability of the organisation. But again, if we go through the assessment process and we think, actually, this is a really good organisation doing really good stuff and it looks realistic, financial management or the governance could be improved. That's where that restricted grant funding comes in. So we can still do your full investment, but we can also kind of invest in organisational capacity and capability. We look quite closely at the market and the business model. I don't want to get too hung up on markets and customers, but we have to know that you're clear on what you're trying to achieve. We have to know that you've got experience of being able to deliver this stuff. We have to know that there's actually demand for it. So if you're coming to us and going, well, I've got a turnover £200,000, I meet it, but I reach like one person a year and that person's not really interested in my service, that's not going to work, because again, it's coming back to, are you going to be able to repay the loan element? We look at things like who your competition are, and what makes you different. And Deborah touched on it before in terms of income, and I'll cover it in a little bit more detail. We're really, really, really keen. We have to understand your revenue streams and what drives those revenue streams. So if it's a trading model and you're operating a cafe, what is it in the local area that influences that cafe income? If you're delivering a service for the local authority, who's your competition to deliver that service? If that contract's only for a year, is there a chance you could lose that contract in a year? In terms of the financial, we've touched on some of this. So the financial part of it, obviously the assessment is important. And what we look at typically, so the revenue streams, I think we've discussed those. It's about diversity, security, and kind of how subject to change they are. We look at your historic financial performance, which is why we're asking for the annual accounts and the management accounts. We're basically looking for trends. Is income going up? Do you have a track record of making surpluses? Have you demonstrated that you can kind of, control your costs? If you've got a couple of deficits in the last 3 years, that's fine. We just need to understand the reason for that, because it could be evidence of a kind of decline in business, or evidence of you not being able to manage certain costs. The resilience of the balance sheet. You don't have to be sitting there with like £1 million fixed asset build, and very few of our flexible finance cases are. But do you have some cash to protect against any kind of variance in, your revenue generation? If you don't have any cash to cover it, is that something that we need to build in as part of the investment? So we can do that as well. So it's really just around really kind of unpicking what the financials look like. So your existing debt and your liabilities, that doesn't just have to be a loan. You might have some arrears. Are you managing that? Are you able to manage that? Is that something that's caused you an issue, and do we need to refinance that a little bit for you if it kind of helps? And the main one for me, and all the stuff above feeds into that, it's really, are you going to be able to repay the loan element? Because it's all very well us come along and say, we'll give you £100,000 loan and £100,000 unrestricted grant, but are you going to be able to repay that loan element? And it's around identifying the source of repayment. As an example, if you're sitting there and all your income comes from restricted grants, this isn't going to be the product for you, because restricted grants will not allow you to repay the loan. So it's around understanding, do you have that source of repayment, and can you afford actually to repay the amount of loan investment that you're asking for? Deborah, I think that's quite a key one. Do you want to add anything on that one?
Yeah, I think that's really important. And this exercise is really good for leaders to go through, actually. In fact, many of the organisations that I've supported have said, this is amazing stuff. Never really gone into this, started to plot my revenue in this way and understand it. And actually, I'm now using this document, this forecast, for many other projects that I'm working on. So I think it's a really important piece of work. It's great for this as an application, but it's also great as an organisation to do. And we can typically see where you are as a leader in this journey. So some organisations, when they make their application, you can see that they do this, they do it well, and they've been doing it for many years. Some organisations we can see. So depending on what gets presented, we've got a good idea of where you are in your journey when it comes to the financials.
Brilliant, thank you, Deborah. Again, I think we've kind of covered this. Obviously, just talking through the other slides. So minimum of 12 months, we've spoken about that, income and expenditure, and being very clear with the assumptions used. Again, realistic. We will kind of tie you back to previous historic performance. If last year you turned over £200,000 and the next year you're forecasting cash in of £1 million, that might be achievable, but it might be difficult. You have to have some very, very clear assumptions on why that would be. Does it actually show the need? So if you're sitting there and you've got, I don't know, £500,000 of cash, wouldn't that be nice? And you're coming to us and saying, well, actually, we'd like a £50,000 loan and £50,000 grant. Do you actually need the investment? Or are you just trying to maximize the grant income, which I get, but sometimes organizations can have too much cash. So it needs to show the need. And again, I mean, it was on the previous slide. There's lots of templates and there's lots of guidance around putting a cash flow together online, but it's well worth taking the time to make sure you get it right. Deborah, is there anything else you want to talk about, the assessment process or the documentation, or I'll finish with a couple of case studies and then we can do the questions?
Just to add that, Ubele Initiative and Create Equity, we are there to support you throughout the entire process. Once we're allocated, we work with you, and we're there at the internal committee, we're there at the external committee, and our role really is to ensure that you present your best case, so that improves your ability to get through the process in the most efficient and effective way possible.
Brilliant. Thank you, Deborah. So just a couple of case studies. These are all ones that I've been involved with, I've got knowledge of, and I've included them just to give you some kind of idea of the scale and the sort of organisations that have delivered that will kind of support. So with this one, brilliant youth organisation, been going about 15 years, absolutely hammered like a lot of organisations by obviously cuts to kind of funding youth services. They do like youth work at the real sharp end, so they do like detached youth work, which is just going up and engaging with young people on the streets. Quite a lot of kind of gang activity. So yeah, they're just a really, really good organisation. A lot of restricted grant income, fairly small, turnover of a couple of £100,000. And what they'd done, they'd actually started to develop a trading model, which was generating some income, so they had a source of repayment. But like a lot of organisations, they were incredibly stretched in terms of capacity. So the CEO, his kind of his capacity was just taken up by doing day-to-day operational stuff. He didn't have the time to step away and do more strategic thinking or generate income. So it was a loan of 50,000, unrestricted grant of 50,000, and a restricted grant of 2,500, just to free up some capacity and bring some business development capacity into the organisation. Quite interestingly, that 2,500 of restricted grant funding was to help them to review employment practices. Because it was such a small organisation, all of the staff, including the CEO, were on fixed term contracts. So we wanted them to get some professional advice and guidance around that. So again, brilliant organisation that we're able to support. Again, another London-based one. So this is an art organisation working in West London. They deliver youth theatre. They were doing this before Grenfell. They are literally in the shadow of Grenfell. But obviously, after Grenfell became even more pressing the need for what they do, they've got a real focus on social housing and housing justice. They are embedded in the council estates that they deliver on. So they've got a building. Well, they've got part of the building. They've got basically the basement of the building. It was so dilapidated. There was water running down the walls. There was constant flooding. It was horrendous. It was horrible. They actually went out and raised like over £4 million of grant funding, which for an organisation of that size was amazing. But because grants were paying in arrears, they needed a bit of cash flow. Obviously, those grant payments. So that's what our investment provided. A loan of 80,000, unrestricted grant of 80,000, was able to cash flow that and allow them to kind of deliver. It was incredibly important to them because this was in the very early days of the cost of living crisis. Their contractor went bust. Things got delayed. They've completed. They've actually managed to repay the loan early, which we were happy for them to do. But without our investment, that project would have likely failed altogether. And the last one, just very quickly, I didn't want you to think that we only just did London organisation. So you might guess from my accent, I'm not London based. So organisation based in the North East, brilliant organisation. They operate a closer recycling business. what they do, they provide learning and kind of volunteering opportunities for women. It's very, it's not around providing professional qualifications and stuff. It's around putting support networks in for kind of refugees and asylum seekers who, recently into the country, have now got settled status. Just an all-round brilliant organisation delivering really good stuff. So again, at the smaller scale, this was an organisation that had a turnover of £200,000. Loan of 50,000, unrestricted grant of 50,000 pounds. It allowed them, it provided just cash flow. They buy stock, they process it, they kind of sort it, they send it to Africa, it's sold in Africa. They were doing one shipment a month. Our investment allowed them to do, up to three. And we were also able to refinance a small loan that they'd taken with a previous social investor. And we now have questions. What we'll do is we go through the questions because I'm conscious of time. I think we've got 9 minutes left in the allotted time. I'm going to put up, obviously, these contact details here. In terms of our website, if you just go onto the website, look for flexible finance funding, you will find it all there. And I've put, obviously, the Grace and I's direct email address as well. Grace, do you want to...
I'll stop sharing.
Talk about the questions.
So I think most of the questions, we had 4, are all based on eligibility. So it's just turnover. The first one, I think, which you responded to was to clarify the grant, whether the grant matches the loan amount. And I think you touched on that earlier on. I don't know if you want to speak about that again.
Yeah, I mean, again, just to be perfectly clear, the unrestricted grant is up to 100% of the loan amount. So it doesn't matter what loan amount you're coming in for. It is capped. There is a maximum. Sorry, I should mention this. So the maximum grant we can provide is £200,000. So if you came to us and said, well, we need £400,000, we could do that as a loan of £200,000 and an unrestricted grant of £200,000. If you came to us and said, well, I need £500,000, if I need 500,000, we would have to do that as a grant of 200,000 and a loan of 300,000. I know those figures might be well above what anybody, on the call is thinking that they need to apply for. But yeah, so up to 100% of the loan amount, up to a maximum grant of £200,000.
Brilliant. The second question was, I think, the 50K to loan exclusive of grant. I think that was one of the points you had on. And I think this just relates to what we could fund, between a 50K loan and up to a 1.5 million.
So what all that means is the minimum loan amount we can provide is 50,000. So if you're coming to us and you're saying, well, I only need a loan of like 15, that's not for us. Again, there's other social investors out there who will lend you £15,000. Our minimum loan investment is 50,000, up to a maximum of 1.5 million. That excluding the grant. So that the loan product is between 50,000 and 1.5 million.
And the grant element is 50,000 to 200,000.
Yeah.
Okay.
Up to 100% of the loan.
Yeah.
So the third question is about, this is another one on eligibility criteria. An organization has 100K turnover, and they were wondering whether, because we can't necessarily fund them, is there any other product like the Flexi Finance where they could get funding from?
I mean, not from us. Not from us. Because our minimum turnover, because again, what we can't do, we can't set organizations up to fail. So if we're going to lend you, and we have to lend you as a minimum 50,000, repaying a loan of 50,000 on a turnover of 100,000, it is really going to stretch it. It was really stretch it. So we wouldn't be able to help with flexible finance. If that organization was had a turnover of say 185 or 190, we could have a conversation. But £100,000, I think we're not going to be able to help. But if that person wants to kind of reach out to me or Grace, I can point you in the direction of social investors who might be able to help, obviously, with a lower loan amount. I can't make a guarantee, but there is other social investors operating at that bit of the market where it's like loans for less than £50,000.
Yeah. And Christian, I've got a question for you, if I may.
Mm-hmm.
Roughly, what kind of percentage of loan versus your turnover would we say is affordable? So an example of that might be, let's say you've got a turnover of, say, 500,500 per annum. What's kind of the loan? What do you think that organisation could potentially service on loan?
I mean, I touched on it a little bit in the webinar. I don't want to get too prescriptive because we're not a bank and we have to look at things in the whole. If you were coming to us and saying my turnover is 500,000, I want to borrow 500,000, that's not going to work with the best will in the world
Yeah.
because you are not going to be able to afford to repay that £500,000 loan that we're providing you.
Yeah.
Typically, about a third or below loan to income. But if you do your sums and yours is like 40 or 45, we still want to talk to you because it's kind of quite a crude measure to use because all it's doing, it's basing it on what the past was. And your forecast going forward might look very different. We've seen lots of organizations that do that. So it's like they've been going for a few years, they've managed to get a return over £300,000, their reputation in the market's established, and they've got commissioners coming knocking on their door, or they might have lots of grants secured. So the future can look very different. So don't get too hung up on the loan to income percentage, but yeah, be realistic. We're not going to lend you 100% of your income.
Yeah.
Okay, thank you. The next question is, who are the external investment committee members?
So the External Investment Committee, I'm not sure if they're on our website. One thing that I did leave off the slides is what we did again when we introduced flexible finance. A part of it was around improving diversity on the External Investment Committee. Sorry, so over 50% of obviously the External Investment Committee are from a Black and racially minoritized background. I think more than 50% I'm sure it's women led. If it's not a majority, it's getting close to it. If you go onto the Social Investment Business website, if you look at About Us, I'm fairly sure our members of our External Investment Committee are listed on there. And we have a real range of skills. We have lots of people, we have, just obviously off the top of my head, we have like some current bankers. We have like an ex-banker or two. We have a lady who ran a black-led community development group in Liverpool for the last kind of 30 years, who's amazing. We've got an independent consultant. Again, obviously, she's obviously from a Black and racially minoritized background who does a lot of stuff around social impact and fundraising. So we have a real good mix of skills. And yeah, I mean, Deborah, you've experienced the External Investment Committee. What's your views of the External Investment Committee?
What's great about the external, so you've got Ubele and Create Equity with you throughout the process. We work obviously to improve racial equity as partner organisations. Then you can see we've got two amazing relationship managers on the call here, and then the internal committee really are focused. The senior leadership team are really focused on improving the performance of the fund, particularly to those organisations that have been left behind previously. So you've got all of this ambition throughout the process. And then when you actually get to it, the external committee, because the process has been so good, it's very rare, and we can't say it's 100% conversion. I have to say that. It's very rare they turn it down. But they can, because they might see something that we haven't seen all the way through the process, through their experience. But the great thing about the external is that they've got lived experience. And often, actually, they're the ones that might even say, look, we want to give some restricted grant in this area. We want to award an extra 5 or an extra 7. It actually happens in that room. So often, the ask, it increases with some additional restricted grant. So my experience has been really positive. Again, you can't necessarily use these stats. I've had 100% conversion. But that doesn't mean that, I'll take one to internal and to external and we don't get a yes. So my experience has been really good. The other thing that I've been working on this fund with the team for about 2 years, and it's constantly being improved, iteratively being improved. If we spot something, we make an improvement. And we made an improvement yesterday, Christian and I. You know, there was an organisation that's just not quite investment ready. They've made the application. We don't want them to make another application because that takes up leadership time. And so we're going to leave them suspended doing a little bit of work with me, and then they don't have to reapply. If we can get them investment ready, just small incremental improvements along the way.
Brilliant.
Does that answer the question, Christian? Did I cover everything?
Yeah,
I know
yeah. No,
it was mainly
fantastic.
about
Thank you,
the
Deborah.
external. It's about the entire package process, isn't it? I think.
Yeah.
From start to finish, it should be a journey that is you know, very efficient, very effective, and leads to the right outcome. Yeah. And if it is a no external committee, it's for the right reasons. I respect them. I've been doing this for 30 years, and I've got immense respect for the external committee. So if it's a no, it will be for good reasons. I sit in the room, so I see other you know, proposals and applicants go forward. It's absolutely for the right reasons. Should they make a decision of a no? But for the most part, it's a yes, and certainly in my case.
Brilliant. Thank you, Deborah. I'm really conscious of time. I mean, I've got a few more minutes. Grace, is there any other questions?
No, I think the other question, the last one, had to do with our contact details.
Okay.
So, yeah, someone had requested that they would like to see our contact details again. So I don't know if we can just check our website, or should I put the slide up again?
Yeah, you share your screen again just for a couple of minutes and put the contact details up. I mean, we will have everybody's contact details. Obviously, that's kind of signed up to this. So what we'll be able to do, and Emily should be able to have eyes on this, Emily should be able to do it. Emily can kind of share, obviously, our contact details. I deliberately haven't put Deborah's on, or obviously the partner from Ubele, because I didn't want them getting kind of lots of emails that Grace and I should be dealing with. But just let everybody know, if you do use my email address, normally it's absolutely fine. I'm only around today and tomorrow, and then I'm off for a fortnight. But, you know, if you go onto our website, you have the option of, again, there's lots of information there about the fund. There's lots of FAQs. There's lots of guidance. There's a previous webinar. But it also gives you the option to just drop us an email, and just as a general query, and somebody will pick it up as well. Yeah, so if anybody wants to talk to me directly, I am more than happy to do that, but I won't be able to do it until early September.
Okay. I have the contact details up. Can everyone see them? Can you see
Yeah.
them? Okay, brilliant.
Yeah. Brilliant. Well, if that's it, obviously, I would just like to finish by thanking everybody for the time. If you do have any questions, please feel free to reach out, even if you think, well, we're not quite eligible now, but we might be in the future, or we just want a bit of guidance around this and need to better understand, you know, a certain element of it. If anybody, you know, thinks that you might not be interested in the fund, but if there's an organisation that you're aware of, you know, that might be, feel free to pass our details on. It's really delivered, obviously, what it was meant to do. Take you back to those original percentages in terms of how much money we're getting out the door now, obviously, to the organisations we're targeting. But we do still have a nice chunk of money left that we would much rather kind of get out there and kind of delivering some social impact. So, yeah, if there's nothing else, just thanks again to everybody for attending. And again, we'll share contact details, and we'll publish the webinar. The webinar will be up on our website as well, in case anybody wants to revisit any of it. Thank you.
Amazing. Thank you so much.
Thanks, Deborah. Thanks, everybody.
Thank you.